Hi, everyone, and welcome to the Stefan Livera podcast, episode 192. My guest today is Alyse Killeen. So those of you who are wondering, what is it like to invest in Bitcoin companies and how do you learn about that process? What are some common errors that people might make? And how do you consider this question of Bitcoin return versus fiat return? These are all questions that we will explore today. But first, a message on behalf of the sponsors of the show. So firstly, Swan Bitcoin. Those of you who are in the US, Swan is absolutely the best place to get your auto stacking on. It's so simple, even a no-coiner could do it. 1, auto fund USD from your bank account. 2, auto stack your Bitcoin. And 3, withdraw your Bitcoin to your cold storage. There's no withdrawal fees. They want you to follow Bitcoin best practices. Swan crushes Coinbase's fees for recurring buys by up to 80% and Cash App's fees by up to 57%. Set and forget. Just enjoy your life. Swan and chill. Go to swanbitcoin.com/Livera to start auto stacking with Swan today. Be sure to use that link and you'll get $10 worth of Bitcoin dropped into your account when you start stacking with Swan. Next is Unchained Capital, Bitcoin native financial services. These guys are awesome. They are doing incredible work building products and services on top of Bitcoin multi-signature. So you can set up a vault. You go to unchained-capital.com and click vaults and you can get started. You can have a concierge call if you need some help setting up. You can bring 2 hardware wallets and that can help you improve your security against, say, a $5 wrench attack if you split up your keys. That's one example that you can do with Unchained. On top of that, they offer loans. So you can put up some Bitcoin and get USD without selling that Bitcoin. So that collateral is stored on chain. It's never rehypothecated. And even then, you still hold 1 of 3 keys in that scenario. So go and sign up at unchained-capital.com. Next up, for my Australian listeners, did you know you can buy Bitcoin with your superannuation? With a Bitcoin self-managed super fund, you can. New Brighton Capital have created step-by-step written and video instructions. They streamline the process. They do the accounting and the reporting for you. As long as you're comfortable making the investment decisions, New Brighton Capital can guide you through that process. And don't forget, you still hold your own keys. It's just a separate entity with your self-managed super fund. So they're offering consultations. Go to newbrightoncapital.com. Use the code Livera for a credit off the monthly fees. All right, so that's the sponsors for the show today. My guest today is Alyse Killeen. She is with Stillmark, and she is the founder and managing partner of Stillmark. And she's also an advisor and an investor in many well-known Bitcoin companies. She is sitting on the board of well-known Bitcoin companies such as Blockstream and Casa. I also first had the chance to meet her at Bitcoin 2019, where I was moderating a panel. It's always a pleasure to chat with Alyse. So Alyse, welcome to the show.
Thank you for having me. I've been excited to have a chat with you when I can actually hear you. So Bitcoin 2020 or 2019, it was difficult to hear you. And so now I'm happy that we can actually talk when we can hear one another.
Of course. And so for listeners who are unfamiliar, what happened with 2019, I mean, it was a great conference. Don't get me wrong. I loved the experience there. I think just what happened is for some of us speakers on stage, there was a little bit of an echo. And so it was one of those weird scenarios where, like, you know, the moderator would try and ask a question and then the panelists wouldn't necessarily be able to hear the moderator or each other. But at the same time, it was a fantastic experience still, nevertheless. But Alyse, let's start with you. So I wanted to start with a little bit around how you got into doing venture capital and investing into Bitcoin.
Sure. So I came into venture capital from the sciences, actually. So I had been working in the study of immunology and research and pursuing a PhD in health psychology. And specifically, I was looking at how cognitive interventions could influence disease progressions. And I was looking at immune-based disease. So this was really exciting, very intellectually challenging, but it was a bit of a break for me in terms of my value system. So I had grown up with 2 entrepreneurial grandfathers. I had even gone to work. So I used to spend summers and weekends with my grandparents going to work with one of my grandfathers and really coming to value entrepreneurship and building. And he was doing, it was blue collar. So my grandfather owned plumbing and large scale sheet metal business in San Francisco. And so it was, real work where you could see the result of your work. And so I could see buildings going up And it was, to have something tangible was exciting. And in academia, it was, you were publishing work to have, 20 or 25 other people read it, to then base their own research off of your work. And so it felt there was a little bit of an incongruity in terms of what I had grown up to value and then what I was doing in academia. And so I thought that I would go back to business school and to learn, to gain a financial tool set. So I had, the math and statistics background, but wanted to gain the financial background because I thought I'd be an entrepreneur. And so in doing that and going to business school and building my network, I started to meet VCs to prepare to raise money for a company myself. And one of those VCs said, given your skill set in research and in math, why don't you think about the other side of the table? And so I did, and just kind of fell in love with it. So what started out as a commitment to do a 10-week internship just turned into a job in venture. And that VC firm was had about $1 billion in assets under management across the life cycle of multiple funds. And they were focused on heavily on infrastructure tech. And so I came up in VC really looking at technologies like cloud infrastructure and networking, data center software, cybersecurity. I spent a lot of time there. And so really like the harder technologies and infrastructure. And so when in 2013, I came across Bitcoin, really I came across Bitcoin as an infrastructure. So as the Bitcoin blockchain, rather than, as a currency that I was thinking about trading or, anything other than just, it was really, to me, it was just an infrastructure. And because of my background, I was able to do a deeper dive on diligence and also have kind of richer conversations with the developers that were working in the space in 2013. And so it gave me a little bit, I think, of an unfair advantage to ramp up on Bitcoin. And then to also understand in 2014 and 2015, when the first ICOs were launched, to understand what the difference was between a Bitcoin blockchain and the other blockchains that were being introduced through ICOs. And so that's how I came into venture and also how I came into the Bitcoin space.
That's interesting as well, because in the earlier days, there was a little bit more, it was kind of like there was excitement about all these different things, because I'm kind of a similar class. I'm class of 2013 as well, right? And in those days, I recall there was, I think in those days, it was, people were just kind of excited about all these different things, right? There was kind of digital gold aspect, there was payments aspect, and then people were talking about some of these other ideas like, okay, time stamping or whatever else. And I suppose you were, and I think a couple of years later, the colored coins idea came as well. And so right. I think these are potentially, were those some of the blockchain applications that you were thinking of in those at that time?
Yeah, so I had conversations, with all of those groups of folks. And, I think coming in as an infrastructure investor to the space, I wasn't committed to any one, application or utility of the infrastructure. I wanted to really do a deep dive on, the people's ideas broadly. And so I think it really created an advantage to the work I do today, to be able to take a real serious look at the propositions that were, that cropped up in 2014 in the early days, and also to see the early process of ICOs and of new blockchain launches. And so that, I think, seeing that early and taking the perspective of an infrastructure and deeper tech investor was helpful in allowing me to really focus on where value is being built today versus the distraction of some of like the quick flip stuff that's happening for folks optimizing for really short-term ROI.
Right. Yeah, I think that's really fascinating. And so I guess because you were one of the earlier people in that space, what were, I guess, what are some of the pitfalls that people who are trying to invest in this space, what are some of the pitfalls that they tend to fall into?
Well, okay. So I think, that's a good question. So, well, I mean, I think the pitfall that people, the trap that people, that investors, venture capital investors, fall into is, frankly, just inadequate diligence on the infrastructure and maybe not asking the right questions, right? So, you know, yeah, I mean, I think, I have to say that there's a lot of luck that went into this also for me. So, for instance, one of the first set of entrepreneurs that I met in 2013 in the Bitcoin space were the Blockstream folks. So in 2013 or early 2014, Adam happened to be in Los Angeles, and so I was able to meet up and talk to them about that group, about the infrastructure of Bitcoin blockchain generally. The technologies that converge to make Bitcoin possible, and then the higher layer infrastructure that could be built on top of it, and the utility set that would open up. And so in understanding that sort of like layering of technologies, it allows me, I think, to better discern what's unique or not unique about a new blockchain that crops up, right? So is this new blockchain that's cropping up something that's going to offer unique value, or is this something that's going to be actually very similar to what the Bitcoin blockchain itself can do once higher layer infrastructure on that blockchain is secure? Does that make sense?
Right. Yeah, I think absolutely it does. And I think that was perhaps a common misconception, if you will, because there would be times where, for example, someone might talk about, oh, this thing does whatever transactions or whatever. But then the thing really you have to think about is once you scale up to the same level of users that Bitcoin has, you're going to run into the same problems. So you're going to need some way to go beyond that, right?
Right, that's exactly right. And I think some of also what we're seeing in the different offerings of various blockchains is just a variation in what the core developer groups are optimizing for, right? So we know that the Bitcoin blockchain development is really centered around security, dependability of the blockchain, and stability. And then we see the trade-offs of that, right? So the way that we progress the updates to the network, for instance, is always going to be the pace of which we progress is always going to be secondary to the maintenance of the core promises of that network, right? And so, and that's a trade-off. That means that things will seem to move slower, and other blockchains that have pushed out, greater utility sets quicker, they've done that. They've been able to do that because that's a priority versus the robustness of the network itself. And so, we've seen a lot of problems emerge when you're not valuing security first. For instance, I remember a little story about like VC, a day in the life of a VC. So sometimes you end up, you always try not to, but sometimes you'll end up in a coffee shop surrounded by other VCs and folks pitching those VCs. And it's, like maybe my least favorite place to be, but somehow we, often end up hanging out in the same places. And I was unfortunately over hearing someone's conversation a few months ago. And it was someone, I guess, that had launched a blockchain through an ICO. And they were saying, oh, like the sale went really well, but unfortunately there was like some security hole. And so we lost access to, $40 million of the funds that came in through the ICO. But, there was no real impact because we still had the other 20 million that came in or whatever. And, it was just like so wild to me that, that people would be that, lackadaisical about security, about respect for the people, for funders' capital, and just thoughtfulness about the longevity of their company, the longevity of the technology that they're putting forward. And so, and that's why I'm focused in the Bitcoin space. So we're thinking a lot at Stillmark about longevity, building businesses for the next several decades, and pushing culture forward broadly in a way that also produces return for fund investors. And so it's quite different from seeking, very quick returns by investing as a VC with early access, and then making the return by selling to a less sophisticated investor.
Excellent. Actually, Alyse, can you tell us a little bit about Stillmark? Why did you found it? And also, because you're sort of wearing multiple hats right now, right? Because you've got Stillmark, you also advise for Mantis, and at the same time, you're also sitting on the boards. So could you tell us a little bit about your involvement across those?
Sure. So I think of it all as one. So I only do things outside. So I have two positions that are outside of Stillmark's portfolio, which is the advisory work with Mantis and the board of director seat with Blockstream. And so those are, I expect those will be the only two positions I take. And I kind of had room to do two things, and those were the two. And the reason they were the two, there's two reasons. And, it's similar actually to some of how I consider portfolio companies or companies that will come into the Stillmark investment network. One is that we want to be really working with like great people. And so I mean that not just in terms of like intellectual contribution or capacity, but also people just of high moral standing and that are really value aligned. And so people who see their work as not just producing financial return, although that's quite important, obviously, but also who are producing a cultural return and pushing culture forward and doing that by applying blockchain technology or applications built on blockchain in a way that's very consistent with Bitcoin's original founding core principles. And then two, the teams like Blockstream or Mantis that I work with outside of Stillmark are companies or groups that really contribute to what Stillmark's doing. And so, for instance, of course, Blockstream is building really a full stack of Bitcoin infrastructure. And so being able to be there at the forefront and in those conversations helps in the decision-making diligence and just even sourcing for Stillmark. And then Mantis is, really attractive because they will have a focus and have already begun investing in the Bitcoin space. But what's different about Mantis from other VCs looking at this space is that, of course, it's co-founded by the Chainsmokers, and the Chainsmokers have just built such an engaged, audience, and they've really done the work to speak back and forth to their audience so that the music they're introducing and the way that they introduce it is a response to what the audience has asked for. And so I guess what I'm saying is they've found a way to have their finger on the pulse of their audience. And we need to bring a bit of that sort of attention and connection to the Bitcoin space. Because of course I'm thinking a lot about adoption and the breadth of adoption of Bitcoin and of applications that will drive adoption. And so having folks that think a lot and have been successful in their work around bringing an audience into the decision-making of their own business helps our founders. And so Stillmark, for instance, co-invested with Mantis in Casa, and Mantis is able to be helpful to Casa by allowing them to think through the breadth of the reach and what their broad consumer group is asking for, or what we should anticipate the consumer group to be asking for in the future. Yeah.
What's it like working with the Chainsmokers?
It's great. So I like to go into getting to know people without having much of an expectation either way. But I have to say, Alex and Drew have totally blown me away. So they're just, both of them are just really incredibly humble and thoughtful people. And so I think, that opens the door for them to really understand Bitcoin. So what I've noticed over the years is that folks that are approach Bitcoin in a humble way tend to grok the tech quicker, right? And so if we come in with an idea of what Bitcoin is supposed to be, or what a blockchain is supposed to be, we kind of start to push back against what it is, or we're afraid to ask, dumb questions. And Drew and Alex are just incredibly humble. And so, so in one of our first meetings, they came really set for that meeting with just, a set of questions about what Bitcoin did, and then responses about how Bitcoin made sense for their own audience and why the folks that they were familiar with would really resonate with the value proposition and functionality of Bitcoin. And so I've been really impressed. And then their work with founders is great. Like they're right there in the trenches. Not just Drew and Alex, but also Milan and Jeffrey, who are the other two GPs. They're right there with founders, like kind of digging in. And that's actually quite unique for VCs. So I like working with them a ton.
Yeah, that's great. And it seems to me that the focus perhaps on their side is a little more at the retail level, where perhaps you're sort of working across infrastructure as well as like retail individual level, right?
Yeah, well, so what Stillmark wants to do is similar to what Mantis wants to do, which is that we want to make sure that we're adding value to portfolio companies. And so the opportunity for me is the network of Stillmark, right? And so I've been in the space since 2013 and have a great network of technical folks and builders in the space, and that can be helpful to portfolio companies or companies coming into Stillmark's portfolio through investment. Mantis seems to be thinking really similarly. So they know, it seems, that what they have to offer is feedback on consumer opportunities and consumer products, basically, right? Because the chain smokers offer a product. And so they're going to be selecting for companies, it seems to me, that they're able to offer value to beyond just the check. And Stillmark is trying to do the same.
Mm-hmm. Yeah, and I'm also interested to understand when you're working with your investors as well. It's also about what kind of time horizon are they looking at? Because if they're looking at no, I want this kind of it's a short-term kind of payoff, then that changes the way you're looking at and advising or investing in companies as well, versus those who are thinking at like a longer time scale. Can you comment a little on that?
Sure, but we're not. So the investors that first of all, I've been really, no one ever asked that question. So I'm happy that you asked that. I've been really incredibly grateful for the initial investor set that Stillmark has. And I think that we, the original backer. So Stillmark launched as a fund in 2019. And prior to that, I had done investments through SPV vehicles or special purpose vehicles, and had spent time at accelerators or other firms where parts of what I did was Bitcoin investing. And, there were other parts too, like enterprise tech or consumer tech investing. And Stillmark was launched in 2019 so that I could focus entirely on investments in the Bitcoin ecosystem. And in order to do that, in the right way, I think your initial investor set is quite important. And I was just, really fortunate that I think some of the sharpest folks in the Bitcoin space were looking for a fund like this. And so Stillmark's initial founding capital in terms of what supports the fund or the dollars deployed from the fund are the folks really that I think understand Bitcoin just the best. And so that was, important to me in launching Stillmark, was to make sure that the investment theses that the fund was based on were supported by the folks that knew the tech even, better than myself, frankly, sometimes much better than myself, and to be able to run my ideas past them, the investment hypotheses past them, the way that sectors of investment were defined, and just, really simple mechanisms of portfolio building, such as, what sort of, when in the life cycle of Bitcoin do we want to invest in this sort of company versus that? This investor group, the initial investor group of Stillmark, consists of people that are really able to, offer an informed opinion on all of that, or an insight on that. And so with that, Stillmark launched in 2019.
Right, I think that's
so I should say, sorry to interrupt you.
Go on.
Nobody's looking for a quick return, right? So venture capital is not a quick return generally. So funds tend to have venture capital, so different from token investing or hedge funds. Venture capital funds have a 10-year life cycle generally. In my experience in the venture capital field, funds will run, sometimes even longer than that. So it's, 10 to 12 years is normal. And then the return on capital starts happening around between year 5 and 7. And so it's really not like it's not generally it's very different from hedge funds. It's not a quick flip. And so for Stillmark, we're only working with accredited investors. And, it's quite important that the investors understand what to expect from venture, and that it's, much different from, say, ICO investing. Although, like I said, the investor set here is, with us, we probably wouldn't be attractive to someone that was interested in ICO investing.
Right, of course. And I think this is also an interesting question, because for many of us who are, we're fundamentally bullish on Bitcoin. And so then the question is, well, if I invest in this, am I going to, like, how am I going to denominate my returns? Am I going to consider them in fiat terms, in Bitcoin terms? And how do I tease those apart? If I want to invest in this space, but I know it might not necessarily return the same that Bitcoin would.
Right. So I think the best way to participate in a Bitcoin venture fund is to hold Bitcoin and to participate in a fund. And I think that, it's hard. I don't like to ever think about predicting the price of Bitcoin. And I also think, in addition to it being difficult to predict the future price of Bitcoin, I also think it's difficult to predict the drivers of the price. And we've seen even this year that, folks have been wrong in what they presumed would drive Bitcoin price, or at least how quickly it would drive it. Mm-hmm. And so I try not to do that. But that said, I think that one of the things that can support the price, the intrinsic value of Bitcoin, is the development of a robust ecosystem on top of the Bitcoin blockchain infrastructure, and on top of Lightning, and on top of Liquid Network, for instance. And so once that sort of economy starts to pick up and there's greater utility of Bitcoin, so right now we know that most people that have Bitcoin have it to hold and trade. And when there's more, for instance, we see people earning Bitcoin and using Bitcoin to be able to be part of a decentralized global workforce, or to do things like pay for their phone minutes, or buy their phone, start to create sort of a circular economy. I think that supports a greater value, an argument for greater value of Bitcoin. And so if we're someone with a position in Bitcoin in their portfolio, it makes sense for that person to also be investing and backing the companies building the economies built around Bitcoin also. Of course, so Stillmark invests in infrastructure. So for instance, one of our early portfolio companies is Lightning Labs. So we do invest, directly in, infrastructure, higher layer infrastructure being built on the Bitcoin blockchain, but we're also investing in companies that are contributing to the economies created around it. And I hope and expect that if we do that right, that adds to the value of Bitcoin. And so there's, I think, a way that Bitcoin obviously contributes to Bitcoin companies, but Bitcoin companies contribute back as well. And that's the kind of company we want to work with.
Yeah, I think that's a great answer. I think it is always a difficult question, but at the same time, if you are fundamentally bullish on Bitcoin and you have a certain view on how you want things to be built out, then this is an opportunity to invest into the companies that are building that particular vision, whether it's, let's say, Bitrefill and you want to be able to buy, phone vouchers, or whether it's Lightning Labs and you want to be able to, obviously be part of the Lightning Network. I think these are all things that people who are in this space have to sort of think about as well, because as they're holding Bitcoins and those Bitcoins are rising in value, then they want to start thinking about, well, how do I want to invest in the space if there's certain things that I would like to see. If something doesn't exist and you want to see it, well, someone's gonna have to put in some work to make it happen.
Yeah, that's exactly right. And I think that I thought that it was important. It's important for funds to be focused on the Bitcoin space because, frankly, we don't have the advantage of having ICO capital to launch venture funds dedicated to Bitcoin, right? Like other projects have. We don't have a marketing budget, all of that. And so to have venture presence and with Stillmark dedicated venture presence to Bitcoin companies, I hope to see that continue to flourish over the next few years. So I hope to see more venture funds, kind of having the same sort of attention to Bitcoin.
Mm-hmm. I think also related is, over the years, I've seen, a lot of businesses come and go. It's been difficult to monetize for some businesses, right? So that some of them have had a thesis that maybe didn't play out, or perhaps they were a little early. So I think that's been perhaps a challenge in the space, because Bitcoin is one of those things where maybe in the earlier days it was thought, oh, there'd be lots and lots of transactional demand for things where maybe the value, maybe arguably, it's right now there's a lot more people interested in hodling. So then things like, wallet services or something like Casa makes a lot of sense. How
Right.
Have you seen any difficulties in companies monetizing and hitting that certain profitability required?
Yes, of course. So I think there's two issues that you bring up. So one, I think it's really important to be investing in a company when the infrastructure itself, so both the hard infrastructure and then the sort of like network of other companies around it, so like the soft infrastructure of that, allow for that company you're investing in to thrive. So when that's not the case, then we have problems like the SegWit 2x debacle, right? So my opinion was that SegWit 2x happened, almost entirely because VCs had, kind of like misunderstood what the infrastructure was ready to do and invested in companies based on metrics that they had projected. So metrics they had assumed would be possible in 12 months, 24 months, 36 months. They had presumed it would be possible for the company to achieve without ever digging in to see if the infrastructure would support that. So did the infrastructure, allow for this many transactions or, this sort of reach? And when they discovered that the infrastructure did not allow for that currently, then they wanted to, change the infrastructure, right? And so then we get SegWit 2x, which was quite unfortunate because, companies were forced to spend resources to build for this potential, like technology challenge. So, I mean, what I would like, so this is a challenge of diligence, right? So the right thing to do is to make sure that when a company comes to you, and this is what we do at Stillmark, when a company comes to you with a value proposition and a product roadmap and that a set of projected metrics, you're not just validating that that's something that the company can achieve given the talent on the team, or past performance of the founders or the rest of the tech team, but you're also validating that that's something that current infrastructure allows for the company to do. And so that's that's something that happens at Stillmark really following the first meeting with the founder. And so we're always thinking about how our companies relate back to the core infrastructure itself. So, trying to avoid those sorts of problems of companies not being able to monetize or achieve their projected metrics. The other thing, though, that I think that's a challenge is that the Bitcoin community tends to or some folks tend to really push back against companies monetizing, which is, I don't know. I guess there's like the purity test of the Bitcoin community, like the breadth of what people have to achieve to be, a real Bitcoin company or a real Bitcoiner is just wild to me now. It's way more stringent and just, impossible to achieve relative to the standards we had in 2013 or 2014, I think. But, I think that founders have to be comfortable with monetizing. And also, I always try to acknowledge to entrepreneurs in the space that really monetizing just protects the value proposition that you're putting out. And so it shouldn't be, people may push back against it, but I don't think it's valid. And so if we want to support our work, if we want to support our tech, and if we want to continue to serve consumers or Bitcoiners in the way that we envision, we need to be able to capitalize our business. And ideally, you don't want to base your business on multiple, endless venture capital rounds, right? We want to build our business based on, taking venture capital if it's appropriate, and then monetizing, capturing some of the value we create for our users through monetization.
Yeah, I think you raised some really good points there. And I think, I guess the first point is around, the infrastructure. What level do we have? Are we being realistic about the infrastructure and other, the founders of these different companies and so on, and their investors also being realistic about that. And then I think the other part is just, there is certainly the Bitcoin, like if you look, and again, Bitcoin Twitter is not Bitcoin, right? There are many people who might, for example, use Bitcoin services or hold Bitcoin without necessarily being a Bitcoin Twitter kind of hardcore person. But I definitely sense that that can make it difficult to monetize, and that can make it difficult for the sort of longer term viability of some of the businesses that are in the Bitcoin space that people rely on, or maybe they use some of the software that this business is making, that open source software. And so, you've got to try to support those businesses where reasonable, I think. But I want to touch on the infrastructure thing. So because in those moments, there's often a lot of confusion. There's a lot of arguments flying either way. There are some people saying, yeah, we can scale on chain. And then there are other people saying, no, hold on, that's going to disrupt the value proposition of Bitcoin. What was your process in sort of sorting out the fact from fiction? How do you sort of stay up to date on infrastructure and what's going to be a useful thing for Bitcoin?
Yeah, so far and away, the most important thing, and I say this probably, in almost every venture capital panel that I do, because I'm hoping people, VCs in the space will do the same. Far and away, the most important thing, I think, is reading and understanding the early discussions in the cypherpunk group when Satoshi was just exploring, what Bitcoin was and what it meant, and when that group was engaging with him or her or the group of them, and pushing back against what was being created and what was assumed was possible from Bitcoin. And so in 2013, when I decided to really dig into Bitcoin, I went through all of those posts and readings, and so there was things that were said there that I still use today in my work, and that have helped me historically avoid some places where other folks have kind of fallen down. So for instance, we always knew that second layer infrastructure was going to be necessary to reach any sort of scale in terms of transactions. And so if you had read the arguments and the dialogue back and forth between this group with Satoshi, you could have avoided, a myriad of mistakes that were made around 2015, 2016, 2017. And so, far and away, that's the most important component of the work that I do now. But then extending upon that, there's two other things that I do to make sure that, Stillmark is really investing at the precipice of what's possible, while being really anchored in just the truths of the tech and of Bitcoin's roadmap. And so the first is that just staying up to date on current writings, so things that are public. So for instance, just the Bitcoin mailing list, or even actually Bitcoin Twitter. So when, for instance, Peter Wooley's Twitter account, I think, is really rich in, offering a look forward, right? So like a 24, 36 month look forward about what Bitcoin will be and will offer. And then, of course, there's a network effect to what, there's an effect of the network that exists around Stillmark to allow us opportunities for proprietary style insight on what's being created at the infrastructure level that will enable application companies and infrastructure companies to advance themselves in the going forward. And so, this is how venture capital works like this outside of Bitcoin too, right? So if you are, in Andreessen Horowitz, for instance, and you invested in Lyft or Uber, and you start to understand transportation flows, domestically across cities or even internationally, you can place a more informed bet on a scooter company, for instance. And so Stillmark does the same in the Bitcoin space, right? So, like you said, I'm on the board of directors at Blockstream. That, of course, feeds in to how Stillmark understands Bitcoin development. We've invested in Casa and Lightning Labs, and other companies that are not disclosed yet. And all of that feeds into hopefully a very comprehensive understanding of where Bitcoin's going from a consumer perspective, right? On the Casa side, understanding what consumers want, hodlers want specifically, and folks outside of the hodler community too. And then understanding also what's happening at the second layer Lightning Network space, right? By having insight on C Lightning or insight on LND. So this should all, if I'm doing things right and spending, the resource of time properly, so that I'm dividing that between companies and also public dialogue of Bitcoin from developers, then, hopefully we have a comprehensive view that allows us to be investing for the next 4 or 5 years of Bitcoin versus where Bitcoin is today, or versus where we hope and have our fingers crossed where Bitcoin's going. We don't want to do that at all, and I think that's what, a lot of investors did that in 2013 or 2014, which is why people were so heavily backing, for instance, transaction companies, right? People were kind of investing with a fingers crossed approach. And just, that's not how I was raised in venture capital to do that, and not the practice of Stillmark. So we want to make sure that we're really grounded in, what will happen in the foreseeable future of the 4 to 5 years, while also, being able to take the moonshots too. But when you take a moonshot, you still want it to be grounded in the truth of the tech.
Yeah, that's fantastic. And I think it's definitely a very fast-paced moving. It's a fast pace in this whole Bitcoin world, and you have to sort of keep an eye on the mailing list and Bitcoin Twitter and so on. You mentioned Peter Willer, and even another good example might be this was a couple months ago now, but John Newbery had a great tweet thread, which I'm sure you saw, which was basically spelling out what he thought is coming over the next little short to medium term, or medium to longer term, let's say. Yeah. And also I've seen, I was quite impressed. You had a appearance, I think this is at the start of last year. So this is probably early 2019. I think you did a Bloomberg appearance, and you had a really great way of articulating, because in these moments you're on TV, you've only got, 30 seconds to make a point, or maybe even less, and to be able to succinctly pull together these different ideas and so on, to be able to say, okay, yeah, we've got Schnorr Taproot coming and blah, blah, blah. I thought you did quite a good job with that also.
Yeah, I really appreciate Joe, I have to say, from What Did You Miss on Bloomberg, because I think that it's, like I said earlier, Bitcoin doesn't have a marketing budget. And, I'm less interested. My portfolio companies don't need me to market them, right? If we're investing properly, they're doing the work on their own. But Bitcoin, and I think even more than Bitcoin, but the value proposition of Bitcoin and then the future of Bitcoin need, more of a platform. And for Joe to be willing to offer that to, the Bitcoin community is really exciting. And so when I get a chance to be with them for What Did You Miss, I like to make sure that I'm mentioning a couple of the new, insider known things that are coming out in Bitcoin that, interested members of his audience that are not Bitcoiners, right? And that, only think about Bitcoin or know about it in their periphery, that they have a couple of things that they can search for or Google to get an idea of what Bitcoin offers in the future. Because frankly, so you and I were lucky to come into this space in 2013, right? So you could search for Bitcoin on YouTube or on Twitter, and you were going to find Andreas Antonopoulos videos or Adam Back describing fungibility or something that really had value. And now if you go on to YouTube or Twitter, that's just not what you're going to have to really dig to find those videos. And they don't actively in any way distinguish themselves from all the scammer videos, right? And so I want to make sure that when I have the chance to be in front of a non-Bitcoin audience, that we're kind of giving them little pieces that they can then search for that will help them filter through the noise and find some signal on Bitcoin.
That's fantastic. And I think another interesting related topic is around kind of the values of Bitcoin, right? And we were touching on this a little bit, Bitcoin Twitter and people who talk about, cypherpunk values and so on. How much of that does that factor into, thinking about whether a certain company or a certain product or a certain service would make sense, right? Because it sort of has to pass that sniff test of the community, as it were. Or is it more like, well, sometimes you can just build a product and it doesn't necessarily need like that community. It just needs the users to kind of take it on.
Yeah, I'm not, I don't even know anymore really what it means, like Bitcoin community. Like, I think it started to just mean people who are loudest on Twitter. And that's, just like not interesting to me, like remotely. But, honestly, I do care what my own Bitcoin community thinks about our investments. And that's because, I trust my network and I know what they know. And I have people in my network that have been working towards the opportunity of Bitcoin for their whole careers, right? So meaning before Bitcoin, they were doing work that would lead to decentralization or individual sovereignty and privacy and things like this. And so I definitely care what my community thinks. The values, the core values of Bitcoin, the founding values, are probably the most important thing when I'm looking at a company in evaluation for investment. And so really what Stillmark is doing is just backing founders who their vision, their product, their plans are consistent with the Bitcoin's value proposition. And if they are to succeed, it pushes Bitcoin forward and it pushes culture forward in a positive way. And so what I mean by that is, a company like, let me use Lightning Labs because I've mentioned Casa before, but, should Lightning Labs succeed, it means that we have a more efficient way to utilize Bitcoin blockchain resources, right? We're able to see different sorts of utility on the Bitcoin blockchain, on the Lightning Network, that weren't possible without efficient use of the Bitcoin blockchain. So for instance, a company that I've mentioned before on other panels, most recently at Kraken's Halvening party, is a company called Stackwork. And Stackwork relies on Lightning Network to be able to pay a distributed workforce in real time for doing really simple tasks like photo tagging. And that can't happen on the Bitcoin blockchain without Lightning Network. And so that's why a company like Lightning Network really makes sense. And we're really grateful investors there. And so so the value, I don't think that we're aiming not to do any investments that are inconsistent with Bitcoin's value proposition. And it's really the first thing we look at. So even before talking to a founder, I'm already thinking about how what they're doing is consistent or inconsistent with Bitcoin's core principles. And for me, the most important part, the reason why I came into the Bitcoin space, I think is different from, probably why you came in maybe, or why other folks did. But what I saw in Bitcoin blockchain was a really beautiful infrastructure, beautifully constructed, an incredible incentive system that made it possible for us for the first time to have a public ledger that was truthful, right? And so through that, I knew that people would be able to broadly have access to shared financial tools and even access, right? So it didn't matter that, we were people in developed markets with privilege, but we could have access to that in the same way that someone from, a emerging economy in Latin America, for instance, could have access to that technology. And so that, to me, like the democracy of access to the financial tools and the lack of judgment in who you are and accessing that. So, just the ability to opt in was, what was most compelling. And so when I look at companies today, some of the companies that are most exciting are those that kind of, allow for that opportunity in Bitcoin to be actuated.
That's fantastic. Yeah. And I think it's, people don't necessarily all come to Bitcoin for the same reason, but I think certainly as long as people are building out products and services and building out in the way that kind of grows Bitcoin and grows the base, then I think then people are aligned, right?
Yes.
I'm also curious to ask a little bit about how you must get a lot of inbound, right? You must get a lot of people coming to you trying to pitch. What are some ways that you would sort of sort the wheat from the chaff? How do you sort of figure out what's going to be a good investment? Is it part of, again, I guess you got to take on your knowledge of the space. What are some of the things that go into your mind when you're making those decisions?
Yeah. So first I want to say I'm always like really, so at the beginning of our talk, I mentioned that my grandfathers were both entrepreneurs. And so I hope that I still maintain some like acknowledgement and understanding of how like, precious and precarious the entrepreneurial journey is. And so whenever someone comes to me with what they're building, I really feel it as a privilege. And so I'm always really grateful when people reach out. And then also we reach out too. So Stillmark will have an idea of what we want to invest in, and then we'll find, what we consider to be the most exceptional founders building in that space. And so really what I'm looking for is, like I said, founders that have a plan or a product that's consistent with Bitcoin's core principles, they're comfortable with capturing some of the value that they create. So what I mean by that is that they're comfortable to monetize what they're building. And that's because, like I said, we don't want folks that are eternally dependent on venture capital or, like the goodwill of community donations. And there's lots of like really exceptional product that can be built based on community donations. But of course, the responsibility of a venture fund is to produce returns for our fund investors. And so there needs to be a more consistent capitalization plan than community goodwill. So we're looking for that. What I'm really looking for are people, are groundbreakers, right? So we want to see, this space is new. There's a ton of opportunity in the Bitcoin space. And so we want to see people doing things like something new, right? So I like to see folks that are either generally like the first to market with an idea. And then there's just a ton of stuff that goes into the evaluation. So, and there's always exceptions. So I even hesitate to say anything, but I'll give one example because I can mention an exception to that. So one thing that I like to see, so first I'll say Stillmark invest at pre-seed, seed, and Series A stage. So that's really broad. My investment experience historically is all the way from first check into a company to last check in prior to IPO. And so, but Stillmark specifically is focused on anywhere from first check in to Series A investing. But within that group, ideally, we want to see some redundancy on the leadership team and like reduction of key man risk. So what that means is this company dependent on just the existence of like one person, right? And if that one person, decides that they don't want to be engaged with that company anymore, does the company continue to go forward? So you want to see resiliency in the company. That doesn't, sometimes in companies that are really early stage, that's just not going to be there. So that one person is going to be totally critical and not replaceable. And so there will be an exception. And I think, in fact, this year in 2020, that I think we'll probably be investing in a company that is an exception to that rule. But generally, we want to see that, the company itself is stable outside of, any particular one person. And then, one thing that is like incredibly important to me that I think, we haven't made an exception for yet. And I don't plan to, is that the company founders or leadership, it is able to engage in like a respectful and collaborative dialogue with Bitcoin core developers. So that doesn't have to be like formal, like, we're buddies. It could be really as simple as like reading Bitcoin Op Tech, right? John Newberry's work and his team's work, or the Bitcoin mailing list, or engaging with folks on Twitter and asking questions. But we want to see that the leaders we work with are able to engage with the folks building the infrastructure in a way that our team leads can understand where Bitcoin's going, and also sort of offer their own response to that, so that not to influence development in any way, but just so that there's transparency about how what's coming for Bitcoin impacts the private company side and the economy being built there. And so there's a lot of, that can even be contentious dialogue, but we want to see people rise beyond, contentious dialogue and also be able to be collaborative and thoughtful. Because when you're building in the Bitcoin space, sometimes the majority of your technical team exists outside of your domain, right? Outside of your control, because you're building on an open source infrastructure. So we're investing in companies building on Bitcoin blockchain as well as Lightning Network. And so you're relying on these developers, that you have no control over and that you shouldn't desire, of course, to have any control over. But we want to see that there can at least be some sort of relationship and connection and respect that exists there.
Yeah, that's fantastic. I think to some extent it's like, it's like reading the room, right? Like don't just kind of bust into the space and think you're just going to like change it. And I think that parallel exists as well with like, even if somebody's learning to be a contributor, they might first spend some time lurking and just kind of assessing and reading and trying to learn the culture a little bit before then they try to contribute or make some suggestion.
Yeah, that's the perfect example. Yeah, I agree.
Yeah. So I guess in terms of if anyone is listening and let's say they have a Bitcoin, they're running a Bitcoin business, what are some of the ways that they should get in touch with you?
Sure. So so first I want to say that when we talk to founders, everything is confidential, even including the conversation. So I think that's actually, a lot of folks have been burned by VCs, and I really hate that behavior that sometimes happens in the ecosystem. So we don't even share who we talk to. We don't share decks. We don't share any data. When I talk to a founder, I presume that all of the data exchanged in that conversation, whether it's an email or an actual conversation, is owned by the founder. So founders can reach out, whatever way they're most comfortable with. So you can reach out on Twitter, you can reach out via email. Stillmark just has like a splash page, but that splash page has an email link to it. And so people can reach out that way as well. And sometimes people also like to be introduced by like their friends that are already in the network, and that works too. So there's no really, right way to reach out. And I guess the right way to reach out is just to know that sometimes the response isn't, a 24-hour response. So I would like it to be. But what I like is that if someone reaches out and then they don't hear back, within that week, then to reach out again. So sometimes we never intentionally don't respond to somebody. And I think we normally are always responsive, but sometimes things slip through the cracks. So the right way to reach out is just to know that we're like hustling to get back to people just as quickly as we can. And that if we don't, that, as a follow-up would be really appreciated. I don't want to put that burden on founders, but I just want to make sure that folks know that, they can reach out again if they don't hear the first time.
Of course. All right. So look, I think that's it from me. But if people would like to just follow you online, just generally, just let the listeners know, where can they find you?
Sure. So I'm on Twitter occasionally at just my first and last name. So at Alyse Killeen. And I think that's it. Every quarter, I'm making a new resolution to be more active on Twitter. So maybe that will happen now with Q3.
Excellent. Well, look, I've really enjoyed chatting with you. Thanks for joining me.
Thank you for having me.
Yeah. And listeners, you can find me online at stefanlivera.com. Thanks very much for tuning in, and make sure you share the episode if you enjoyed it. We'll see you guys in the Citadels.